Hi, this is Roger Balzer. Welcome to a special edition of our 2-Minute Tuesday. The date is March 1st of 2017 and our title is State of the Markets. What I want to do here is give you an idea on where the market stands as of Wednesday, March 1st of 2017. What I try to do with point and figure charts is to manage the risk in your portfolio basically by stacking the odds in your favor. What this does is it helps us avoid disasters when we invest. Many investors experienced disasters in 2000 and 2008. The point and figure charts I use are not perfect. They have some limitations. For example, they cannot predict the future, but then again, I can't think of anything that can accurately predict the future. However, the point and figure charts are exceptional at telling us what is happening right now, and right now is what we ought to be concerned about. What you're looking at right now is the short-term 50-point chart of the Dow Jones Industrial Average. What I want you to do is pay attention to the column furthest to the right that I have a green arrow going up. It has very, very little pause previously to that. What this chart is telling us is the market is very, very extended. But before I get into more specifics, I want to tell you that the three long-term indicators I use to measure risk in the market, they're all positive at this point in time. The market usually does pretty well when this happens. From 83 to 86, it happened again in 03 to 06. We had a couple pretty good runs at that time. So when they are all positive, the market tends to do well. The main takeaway here, though, is we are in a really extended and overbought market. The way I know this is take a look at the top, median, and bottom that I have highlighted here in yellow. These are the 10-week trading bands. As you can see, we are way over the top of the band. Do you remember Statistics 101 from high school and the bell curve? Well, let me show you what I mean. What you're looking at here is a bell curve. You've probably seen this before. Most of the time, or 68% of the time, stocks and mutual funds tend to hang around the middle of the bell curve. That's the area we have here in blue. That's 2/3 of the time they are one zone plus or minus the middle. The other 1/3 of the time, things get stretched to either the left or the right. When I apply this to point and figure charts, some of the time we get extended 2 to 3 zones away from the middle, and that means things are oversold or overbought. The rubber band has been stretched too far to the left on the oversold, which you see here in green, and that basically means that things are going to go up or move back to the middle. The opposite is also true. If you take a look here at the right-hand side that I have highlighted in red, this is about 2.5 zones away from the middle. Sometimes it gets over to 3, and that means we're way, way overbought. The rubber band's has been stretched way, way too far to the right, and we need to have it pull back to the middle. Pulling back to the middle can happen in one of two ways. The first way is the market corrects itself. It's basically a pullback. It corrects itself. The other is the market just kind of muddles around or takes a breather for a week, 2, possibly 3, sometimes 4 to 5 weeks. This is a pretty important concept that I want you to remember, this idea of the bell curve. Right now we are way, way overbought, and we need to make a move back to the middle of the trading band. So now let's go back to the Dow Jones Industrial Average chart I showed you in the beginning, and you'll see what I mean. Take a look and you can see that last column of X's is well past the top of the trading band. The S&P 500 and the NASDAQ are also showing the same signs. What I'm looking for is for things to cool down a little bit, then we'll be able to put some more money back to work. A lot of the times in the past, we have seen these pullbacks happen, and they've turned into bad times to put money to work. But the good thing about how the market is now is that our three long-term indicators are all positive, and when they're all positive, any pullbacks are just that, a pullback. Remember, if you have a mutual fund, ETF, stock, or even your 401k you'd like me to analyze, get in touch with me. You can find me on the web or even call me at 440-610-3012. This has been Roger Balzer, and I'll see you next time.